Welcome. In this video, we will look at whether the Xcn coin starts to rise from this region. Please watch to the end to understand and not miss anything. First of all, we see that there is a clear downtrend on the chart. This trend has put pressure on the price for a long time and has caused the price to move downward at every attempt. However, when we look at the recent price action, we see that this downtrend was broken, but the price was unable to sustain its upward movement after this breakout. In other words, even though the price managed to break out of the trend, it was unable to find strong enough buyers and fell back into it. This is often referred to as a weak breakout and indicates that the trend change is not finalized. If the price had been able to stay above the trend after breaking strongly out of it, this would have increased the chances of a bullish continuation. However, the current picture is that the price is back inside the downtrend, indicating that the market has not yet set a clear direction and the buyers are not strong enough. In such a situation, we can usually expect the price to fluctuate within the downtrend for a while and attempt to break out again. If the price rises again and breaks the trend again and stays above it this time, it will be possible to say that the bullish movement is gaining strength. And of course, it will be important to retest after the breakout. Looking carefully at the chart, we can observe a significant shift in price movements. Previously, the price was in a clear downtrend, making lower highs and lower lows. But when we look at the recent movements, we notice that this is slowly starting to change. It is now possible to see that the price is no longer making new lows, but rather higher lows compared to previous lows. This can often be a sign that the market is starting to lose its bearish momentum. In other words, it could be the beginning of a process where sellers are not as strong as before, and buyers are slowly coming into play. In particular, the fact that the tops are still not fully rising, but the bottoms are no longer falling, and are even starting to rise slightly, indicates that the market is entering a sideways movement. This type of price behavior usually signals a consolidation process and indicates that the market is about to set a new direction. During such periods, the price usually moves within a certain band and does not form a clear trend. That is, there is neither a strong uptrend nor a clear downtrend. This process can sometimes last for a few days, sometimes for weeks. But what matters here is which levels the price will break and end this sideways movement. If the price breaks to the upside and starts to form higher highs, it can be considered as the beginning of an uptrend. However, if the price breaks down again to form new lows, it will be possible to say that the downtrend continues. It is also important to examine the volume movements in this process. If the volume is gradually decreasing while the price is moving sideways, this may indicate that the market is undecided and the big players have not yet set a clear direction. However, if the volume starts to increase at some point and the price moves strongly up from this sideways area, then we can consider that the rise is based on more solid fundamentals. If you are looking to buy, this is a good area as the price is going sideways as it is no longer falling. The same thing happened with Bitcoin in 2022. There is actually an important reason behind the downward movement of the price stopping exactly at this level. When we examine this level, when we look at past price movements, we can see that this has previously worked as a strong support zone. In other words, the price had made an upward ascent by taking power from this level at the start of the previous upward movement. Support and resistance levels are very important points in the market. Because these levels are the points where the price has given a certain reaction in the past, they can work similarly when they are tested again. The point where the price stops falling right now coincides exactly with the area where the uptrend started before. This means that this could be an area where buyers are strong. Sellers want to keep pushing the price down, but at this support point, buyers step in and slow or stop the decline altogether. Such support zones are often critical areas where the market can change direction. If the price receives a strong enough buying reaction at this level, an upward movement may start again from here. However, as strong as the support level may seem, if the selling pressure continues and the price breaks this support, the bearish move may deepen and move towards a lower support level. Also, another important feature of this level is that it has not only worked as a support in the past. Some levels can work as both support and resistance. If the price has already moved upwards from this level, there is a high probability that there will be a reaction in the same way. But if it is broken here, the support level may now turn into a resistance zone, and it may be difficult for the price to break upwards again. In technical analysis, such zones are often closely watched by traders. Especially large investors and institutional buyers may tend to buy when the price hits certain support zones. If a strong increase in volume is observed here, it may be an indication that these buyers have stepped in and the price may move up again. Such support zones should be examined and followed. Looking at the chart from a broader perspective, we can observe that price action is in the process of forming a distinct bull pattern. Bull patterns are usually one of the strong technical structures that indicate that the markets have entered a recovery phase after a prolonged period of decline or consolidation. At the moment, the price is moving at the bottom of this pattern, meaning that it seems to have reached the lowest point of the dish or to be forming a bottom at these levels. The logic of the dish pattern is that the market forms a long-term base and then rallies upwards from this base towards the old highs. On the left side of the bell, we can see that the price falls in a downward movement, moves sideways for a while at the lows, and then starts to rebound back upwards. In order to complete the right side of the pattern, the price needs to move up from this low. To determine the target of this pattern, the depth of the dish is usually measured. That is, the distance between the low and the high of the dish is taken and added to the breakout point to calculate the pattern target. This gives us an idea of the potential levels the price could reach if it breaks to the upside. However, for the price to complete the right side of the pattern and continue its upward movement, it will need to break through the resistance levels in front of it. However, bull patterns can sometimes combine with a handle pattern. In other words, the price may not move directly upwards after completing the bull, but instead consolidate horizontally for a while and show slight pullbacks. In this case, the bull and handle formation is formed, and the target of this formation is again calculated by the depth of the bull. As a result, of course, this pattern is not something that can be completed immediately. It is a pattern that requires time. Analyzing the chart in detail, we can see that the price had a strong reaction from the current support level, and this is no coincidence. It is especially important to notice that this support point was previously working as a bullish order block zone, and when the price came here, buyers stepped in. Bullish order blocks are usually areas where large investors or institutional traders are buying strongly, and these are the levels where buyers are expected to react by re-engaging when price revisits. At this point, analyzing how the price has moved each time it has visited this level in the past can provide important clues as to what kind of price action to expect in the future. If the price has previously shown a significant buying reaction when the price has touched this area, this indicates that the level is working as a strong support point. Currently, the fact that the price initiated an upward move with a sudden buying reaction when it touches this area confirms that this is a strong support area. Also, the fact that the price reacted upwards by holding exactly at this level may indicate that buyers see this area as a critical opportunity and strong buy orders are coming into play in the market. If the trading volume also increased along with this reaction, it suggests that the uptrend may be healthier and more sustainable. This is because usually big players tend to make strong purchases in such bullish order blocks to keep the price moving upwards. And if the price comes back here again, it may react again. Looking at the chart, we can see that price action is shaped not only by reactions from support levels, but also by resistance points above. In particular, there is a prominent bearish order block at the top, and this area could prove to be a significant obstacle when the price rallies towards it. Bearish order blocks are usually areas where large sellers have placed heavy sell orders. When the price rises in these areas, the selling pressure increases, and there is usually strong resistance. By looking at how the price has reacted to this area in the past, we can get an idea of how the price might move in the future. If in the past the price has fallen every time it has come to this level, this area may be working as a strong resistance and may create similar selling pressure when it is retested. Even though the price is currently in an uptrend, one of the biggest obstacles seems to be this bearish order block. If there is not enough buying power when the price reaches it, there could be another pullback. The price is likely to struggle at this resistance point, especially if trading volume remains low in this area or buyers don't move strongly enough. However, what is important here is the momentum with which the price moves into this area. If it moves towards this area with strong volume and momentum, the bearish order block could be broken and the price could move higher. In addition, if the price moves sideways for a while and gathers volume once it reaches this level, the chances of breaking this resistance point will increase. So it is less likely to break it the first time it touches it. When we take a closer look at the RSI indicator, we see that it forms an uptrend in parallel with price action. An uptrend in the RSI is usually a positive signal that the price is gaining strength and is in an uptrend. Currently, the RSI is approaching this trend line, and if it gets a reaction here, it could be a positive development for the price. Such rising trend lines indicate that buyers remain active in the market and react strongly to declines. If the RSI moves up again with support from this trend line, it indicates that the price may also maintain its bullish momentum. However, there are some points to note here. If the RSI fails to make an upside bounce when it touches the trend line and dips below it, this could be a signal of weakness. In such a case, the probability of seeing a pullback in price action will also increase. This is because the RSI is often considered as one of the leading indicators of price action. If the RSI breaks the trend line down, there's a good chance that the price will follow the breakout. But if the RSI bounces off this trend, we will see a nice rise if the price breaks its downtrend. Looking at the MACD indicator, we can see that it is currently moving below the 0 point and is preparing to make an upside crossover. This could indicate that a possible momentum shift in the market is imminent. In particular, the narrowing of the distance between the MACD line and the signal line suggests that a crossover is imminent and a critical period in determining the direction of the price is entering. A MACD below the 0 point indicates that the price has been in a bearish trend so far and the market is riding on a weak momentum. However, what matters here is whether the MACD line will cross the signal line upwards. If it does, this can be interpreted as a bullish signal, and the price is more likely to start an upward movement. Especially if the MACD line makes an upward crossover below the signal line, this is usually considered a trend reversal signal. On the other hand, the MACD crossing below the 0 point may also indicate that a strong uptrend has not yet started but is in preparation. This is because strong uptrends usually become more pronounced when the MACD crosses above the 0 point. If it makes this intersection and crosses above the 0 point again, the price takes flight. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.